Hi there, I'm Darren McDermott and you're watching The Week Ahead. Today I'm joined on the line by Naeem Aslam, Chief Market Analyst at Ava Trade in Dublin. Naeem, we have US retail sales out this week. Also, Janet Yellen will be speaking and the Michigan Confidence Survey is set to be released. Now, how did the US dollar finish on Friday? And what sort of performance are you expecting to see this week?
The dollar had obviously extremely volatile week on the back of Portuguese situations and the expectations around the interest rate. Now we are expecting pretty much a similar week for this for this week. I know we think that the dollar is going to be under pressure as long as Janet Yellen doesn't shows any sign of increase in interest rates. But in terms of data, we had a robust data for US. The weekly jobs number were extremely good, and this is going to keep more pressure on Janet Yellen for the coming week. But the one big event in terms of Michigan confidence and the consumer confidence, which translates anything, is going to be the Farm Bureau event, which is taking place in Europe. And I think this is the number of goods and the airplanes ordered are actually going to give us the real indication about the consumer confidence.
Moving over to Canada, the loonie dollar fell to a two-week low against the greenback on Friday after unexpectedly weak domestic employment data suggested that BOC will leave rates on hold at its meeting this week. Now, Naeem, what sort of tone are you expecting?
We think they can stay bullish, even though the data was a one-off bad number, but they will stay very cautious on the outlook because of this, and it'll be very much dependent on the economic data for them to talk about any kind of interest rates when it comes to their policy. But the question will be again, if you're talking about Canadian dollar against the US dollar, it is again depending on how Janet Yellen is going to testify and what she's going to talk about the interest rates.
And Merkel has warned us about euro fragility due to fears over a Portuguese bank. But how concerned should investors be by this, and what other fears could have an impact on the performance of the euro this week?
I think it's very important to explain about the Portugal economy. The unemployment is 15%. Their first fiscal quarter was negative. There's almost no growth in the country at all. Yes, they have reformed a little bit about the banks, but this Banco Espírito, the situation and the structure of the bank is extremely difficult to understand. They are saying that the debt is about 1.2 billion and the bank has a buffer of 2.1 billion. But the reality is that we don't actually know, because as the statements are coming from the bank itself and the internal auditors, and we do know how these statements could be volatile and could be incorrect.
Moving over to Asia, we have the BOJ rate decision tomorrow, and India recently released its budget plans. So how do you expect the rupee and yen to trade this week against the US dollar? And Naeem, what other events will you be closely watching in Asia this week?
I think the biggest event would be the Bank of China that we'll be watching, and we see it because that is going to dictate the entire week. Okay, if the growth is picking up, the Chinese economy is they are restructuring themselves, and that is going to set the tone for US and for European trading as well. But going back to your questions of Japan, the consumer confidence was robust. We had the reading of 41. The forecast was 40. Machine data was good, but the core machinery orders fell. So there's a bit of a cautiousness again there. We're not expecting anything from the Bank of Japan when it comes to interest rate decision. About India, the budget was extremely robust, moved the market way ahead, and this is obviously a positive aspect from a currency point of view, and we think that Indian rupee could actually go higher against the dollar.
Naeem, thank you very much for speaking to me today. Well, viewers, do stay tuned as we have plenty more just like this heading your way. Goodbye for now.